Yellen, this great potato, defends IRS rule requiring banks to report all transactions over $600. So Treasury Secretary Janet Yellen is defending a Biden administration proposal that would require banks to report data to the Internal Revenue Service on transactions over $600, calling the collection of information routine, after taking heat for the idea that is widely seen as an unprecedented invasion of privacy. So during an interview on CNBC Squawk Box on Tuesday, Yellen was pressed on whether the IRS has the wherewithal to collect more information about taxpayers and bank accounts, including cash flows, something many Republicans have called invasive. Well, of course they do, Yellen said. Right now, on every bank account that earns more than $10 a year in interest, the banks report the interest earned to the IRS, and that's part of the information base that includes W-2s and reports on dividends and other income that taxpayers earned, so collection of information is routine. Yellen cited the enormous tax gap in the U.S. as the reason behind the proposed tax hikes, and information collecting blaming the gap on places where information on income can be hidden. It's just a few pieces of information about individual bank accounts, nothing at the transaction level that would violate privacy, the secretary said. So the collected information would ostensibly help the Treasury Department determine which high-income wealthy individuals may be concealing transactions and income, and these would be helpful indicators of where it would make sense for auditing to occur, she added. So it's not reporting of individual transactions or anything of the like, and it would be a simple thing for banks and other payment providers to provide along with the other information they're already providing. So under the proposal, banks would be required to turn over aggregate inflow and outflow numbers annually to the IRS, and would cover bank accounts with at least $600 or at least $600 worth of transactions, according to the Wall Street Journal. The proposal has been slammed by Republicans as an invasion of privacy, and last week Senator Cynthia Lummis slammed the Treasury Secretary during a Senate Banking, Housing, and Urban Development Committee hearing, asking if she was aware of how unnecessary this regulatory burden is. Do you distrust the American people so much that you need to know when they bought a couch or a cow? The Republican senator asked. There are obvious privacy concerns for all Americans here, and this represents a dramatic new regulatory burden for community banks and credit unions in Wyoming and elsewhere, Lummis added. So bank customers are not subjects to the federal government. Banks do not work for the IRS. Yellen defended the plan, telling the senator banks already report directly to the IRS the interest that they pay on accounts when it exceeds $10. And this is not a proposal to provide detailed transaction level data by banks to the IRS. Well, $600 threshold is not usually where you're going to find the massive amount of tax revenue you think Americans are cheating you out of, Lummis fired back. That's correct, Yellen admitted, but it's important to have comprehensive information so that individuals can't game the system and have multiple accounts. So several states have also expressed concern of the proposal, including Nebraska, which slammed the information collection as a violation of Americans' constitutional right to privacy and said the costs associated with banks, credit companies, and other financial institutions complying with the requirement would be passed on to consumers. This could lead to a tremendous invasion of privacy, the likes of which our country has never seen. Millions of law-abiding Americans would suddenly have their bank accounts open to federal investigators for no more reason than buying a refrigerator. This is simply unconscionable, and to make matters worse, under this proposal, saving for college could put an American family on the IRS's radar, costs that most likely will be passed on to the public, Nebraska State Treasurer John Moranti said in a statement released last month. And this is another thing that a lot of people, if you end up stumbling upon this or listening to this, what you need to understand about this as well is that if you were to really break this down and take a step back and look at this whole situation, this is not to go over the rich. This is not to go over any individual that's making a decent amount of money for tax purposes. This is not what that is. This is a situation where you're basically having a regressive tax on the poor. Okay? You are literally taxing the poor in this situation. right? You are taxing basically the people that are living paycheck to paycheck, people who are bad at their finances, right? People who are in the poverty line, right? Who might be getting things on the side from like cash jobs that they might be doing or cash gigs that they might be doing, right? Like, this is not going to affect people who make any decent amount of money at all. This is not going to affect CEOs. This is not going to affect people who are making millions of dollars. This isn't going to affect people who are making hundreds of thousands of dollars. This is not even going to be affecting people who are making $50,000 a year, right? Unless they're like super bad with managing their money, right? This is going to affect the poor, right? This is going after the poor. And many people may not even realize this, but typically the group of people that get audited by the IRS the most are not the rich. Why? Because the rich can pay for extremely good tax lawyers and accountants to do their taxes for them so that they could cross their T's and dot their I's everywhere that they need to, and also go and see different things that could potentially lessen their tax burden, right? And if you're super rich, you don't even take an income at all, and you never have to pay taxes, okay? But for the average working individual in the United States and the poor that are not taking the unemployment assistance or government assistance, right? But even then, they're still getting taxed on that stuff as well. That's the basically group of people that typically get audited by the IRS the most, right? Because they tend to screw up on filing their taxes. So this is a very scary situation, not for people who have any amounts of money, but for people who don't, for people who are living paycheck to paycheck and people who are poor. And people need to really understand this, right? It's like the government isn't going after the rich, okay? They are trying to go after the poor, and they're trying to go after people who are bad with managing their money, which is the majority of the United States population. If you're rich, you're not going to be managing your money badly. If you're wealthy, you're not going to be managing your money badly, right? And you're going to make certain that you don't screw up on your taxes. But every other income level will have a higher likelihood of screwing up their taxes, right? They'll have a higher likelihood of potentially being in this like $600 amount, this threshold, right? Because like, think about it. If you're a millionaire and you got millions of dollars in like cryptocurrency, stocks, real estate, and even in your bank account, right? $600 doesn't mean jack crap to you. But if you're living paycheck to paycheck, $600 can mean a lot for you. If you're a student, $600 can mean a lot for you, right? So this is something to really understand. Like, this is going after the working class and the poor. And also people who are just trying to save money for college, trying to save money for like their first ever car, and when they want to pay it in cash, all that kind of stuff, right? So just keep that in mind. Anytime you see the government trying to do things when it comes to like taxes or all this kind of stuff, right? They are basically going a roundabout way and screwing the working class and the poor. Keep that in mind. Because they typically never actually do anything to the rich, because the rich don't necessarily get affected, because guess what? They could easily just go to a different country. Everybody else can't, right? So all this kind of like implementation that they're trying to do with these laws and into the banking system are going to negatively affect working class citizens and the poor. Because also you got to think about this too. How does this affect illegals in the United States as well? Because that's also going to be an issue as well. And are they going to do something about that? Are they going to go after illegals for having this threshold as well? Right? It's going to be a very interesting situation. By the way, if you want to learn how to get out of debt, go to 40inbox.com.